Hi folks, welcome to the Rockaway Mortgage YouTube channel. Today we are going to do a video on getting pre-approved. So this is the first step to buying a home. There's a few reasons why you want to start with a pre-approval before anything else. One reason being is you're going to be able to narrow down your search. So you're not going to be looking all over the place at maybe houses that you can't qualify for or houses that don't fit inside your budget. So it really helps you narrow down your search and be efficient when you're going to find a home. Another reason is real estate agents, they don't get paid to take you out shopping. So unless you have that pre-approval letter on hand, they're probably not going to take you to see any houses. That pre-approval letter gives you, that's like your ticket to shop. So it's a good reason to have your pre-approval set up. And three, make sure that you get that pre-approval so you're prepared to put in an offer. Today, houses are going so quickly because of the low inventory levels that you want to have that pre-approval letter on hand, or you could possibly miss out on a house that you really like. So very important reasons to get that pre-approval done first. Now, there's three main pillars to a pre-approval, and we're going to talk about those pillars so you kind of understand what's involved in the whole process. Credit, income, and assets. So let's start with credit. What's your minimum credit score to get a mortgage? Well, 600 is really your minimum credit score to get a mortgage, but we tell people to aim for 620 or above because that's going to open up a lot more doors for you. It's going to give you more options, different loan programs, and you end up getting a better deal. So if you're below a 620, you're probably better off spending your time fixing your credit up and getting that credit score as high as possible than you are trying to apply for a mortgage. Another question that we always get, and I want to touch on this subject, is why the credit scores are so much different than they are on Credit Karma or the credit card apps. So those apps and the websites are great tools for monitoring your credit. Is that going to be your mortgage score? No. Now, is it going to be close? Sometimes it's close. Sometimes they're very far off. It's just a completely different scoring model. With your mortgage score, there's things that are weighted a lot differently than you're going to find on Credit Karma and the other credit card apps. And also a lot of those credit card apps and Credit Karma, a lot of them are simulators, so the scores aren't going to be exact. But again, it is a good tool. So if you see collections on there or high credit card balances, that's good to monitor that stuff. And speaking of high credit card balances, if you're looking to improve your credit, the best thing you could do is pay down credit cards. So anytime you're up against that credit utilization, you're at your max credit utilization, your credit score is going to take a big hit. But if you could bring that credit utilization down to 20%, some people say 30, I like to say 20% or less of the credit limit, your credit utilization. So bring that credit utilization down, that'll really help improve your credit score. A lot of people are also worried about filling out an application because of getting their credit pulled. Now, it is a hard credit pull. Will it affect your credit score? Yeah, it might take it down a couple points, but an inquiry for a mortgage is not the end of the world. You're going to realize more of a benefit getting your credit pulled and getting a pre-approval all set up than you will not getting your credit pulled. So if you don't want your credit pulled, you can get what's called a pre-qualification, which basically means, yeah, you could probably afford that house, but you're not going to get anything that allows you to actually put in an offer. So it's not a solid pre-approval like it is, when you actually get your credit pulled. So, and just keep in mind, when we pull credit, we pull all three bureaus. We pull TransUnion, Equifax, and Experian. And you're going to use the middle score out of those three bureaus. Now, if there is two borrowers on the loan, we'll actually use the lowest credit score, the lowest middle score out of those two borrowers to qualify. So just keep that in mind too. If one borrower has really good credit or one borrower has really bad credit or not so great credit, we're going to end up using the lower score. So both people have to qualify if you're putting two people on the loan. You can't just use one person's credit score. All right, let's talk about income. So income has to be stable and it has to be likely to continue, okay? That means it has to be likely to continue for at least 3 years. And so let's touch on some different kind of income that can be used. So you can use alternative income such as Social Security, child support, any kind of benefits that you get. So like disability. So there is other types of income you can use, retirement, pension. So you don't just have to have traditional income. Okay, another important factor is you do have to have 2 years of work history. All right, so how do we use your income to actually determine how much you qualify for? This is called your debt to income ratio. What debt to income ratio is how much you make gross a month compared to your monthly liabilities, and it has to include your housing payment. So your gross monthly income has to be able to carry all your monthly liabilities plus your housing payment and stay under a certain percentage. Now that there is a ratio, I tell people just to aim for 46% or less. It can go more than that depending on what loan programs we put you in, but that is a good rule of thumb to shoot for. And remember, monthly liabilities, we don't count things like cell phone bills or utility bills. It's only going to be stuff that's on your credit, such as credit cards, car payments, student loans, any kind of installment loans. So anything that's basically on your credit is what's going to be counted as monthly liabilities. And with credit cards, we only count what your minimum monthly payment is. So even if you have a higher balance on your credit card, we only use whatever the minimum monthly payment is to include in your liabilities. Now you can use a co-borrower to help you qualify. But again, just beware that the co-borrower has to qualify also on the credit side, not just the income side. But a lot of people, if they're short on income, they'll bring in a co-borrower, and that'll help lower their debt to income ratio. All right, finally, let's talk about assets. So assets are basically the cash you're going to use to cover your closing costs plus any kind of reserves that's necessary. So big thing with assets, and we do run into more issues than not with this, is large cash deposits in your bank account. So any kind of cash has to be documented in season. This means it has to be in the bank for at least 60 days, or we have to be able to document it. So just be careful if you're putting big cash deposits in the bank. Make sure you do it far ahead of time. At least that 60 days, so it's seasoned cash, or make sure we can trace it. And that's with any kind of deposits that are going in your bank account. So if you're transferring money from bank to bank, we're gonna have to show where that money came from. So just remember, it has to be seasoned and it has to be sourced. So some funds being sourced means we have to be able to see where the funds actually came from. So what are reserves? Sometimes you're required to show more money than it actually takes, to close the loan. That's called reserves. Some people need reserves, some people don't. Reserves are going to be how many monthly payments you need to show on top of your closing costs and down payment. So sometimes you'll need 6 months of reserves, meaning that you need 6 months of mortgage payments after your closing costs and down payment in the bank also. So that's what reserves are. Again, it's not necessary for everybody, but I just wanted to touch on that because sometimes you do need reserves in order to close your loan. All right, thanks for listening. Comment below if you guys have any questions whatsoever. Also, don't forget to subscribe, hit that bell. We're going to be doing a lot of educational videos, and we look forward to helping you all out with your future mortgage needs. Have a fantastic day, and we'll talk to you soon.